Hi traders, welcome to the live webinar with FXDD. My name is Chris and we're going to take a look at Brexit and the US economy. First of all, Brexit, of course, it's a good timing because we are having big news that is going to be a vote in the UK, as you probably know, that will take place, well, in about right now, I think, or an hour from now and 2 hours from now. So a lot of exciting stuff happening in the UK at this moment with regard to Brexit and the EU, and we'll talk about this vote in just a second and take a look at some charts. Then we'll dive into the US economy after that. All right, so timing is a little bit unfortunate because if we had it 2-3 hours later, we would right away know the vote, but at this moment it is looking like it will be a no at the moment, a vote against the government, against May, but within 2-3 hours we will know. All right, so for those that are following me, Elite Currency, already, you know that I'm using a new microphone. So let me know how the sound is, if it's working well, and etc. That would be good to confirm. I did some tests by myself, of course, but yeah, it's always good if you can confirm that quickly that the sound is good. Let's move on. In the meantime, this disclaimer. Just be aware that trading for exchange in general is considered high risk, of course. So if you're looking at this video, just pause it, read through it. Otherwise, it's a standard risk disclaimer regarding trading in general, of course, and especially leverage trading. Always carries a high level of risk and only trade with capital that you are able to risk and lose. All right, so today, as I already mentioned, we're going to be talking about Brexit and the US economy and what we can expect in 2019. By the way, this is only part one. Part two will be next week, same time, same place on Tuesday. That will be January 22nd. And we're going to dive into some more charts than today. So put that into your calendar if you like. All right, so it's been a long story, hasn't it? Brexit already. Actually, the vote originally occurred on June 2016. And time does certainly, yeah, it was June 2016. Time certainly flies. That's already 2.5 years ago. Amazing. More than that, actually. Then, of course, the actual Article 51 was triggered in March 29, 2017. And the 2-year anniversary is coming up this year. So that's why, of course, there's such a race to find an agreement with some in the UK and on the EU. Not everyone. It's been a tragically slow kind of negotiation, a tough battle between both, but ultimately we're here at this point where we're going to have a vote. So how did we get here? Well, first of all, there's been a lot of plans and ideas that were offered, and basically the main issue in a way, or the main element that is blocking many of the proposals is, in a way, Ireland, right? And the border between Northern Ireland and the Republic, or the main Ireland. So the Northern Ireland, of course, belongs to the UK. And if there is a hard exit, there would be a potential hard border. And that's something that is causing some problems. Or if Northern Ireland stays, if there's an open border between Northern Ireland and Ireland, of course, then basically Northern Ireland becomes part of the customs union of the EU, but the rest of the UK isn't, creating a border between Northern Ireland and the rest of the UK. So this is really most of the problems. They did arrange, or basically they made an agreement about the finances and how much the divorce bill would be. You know, this is basically what was settled in the end, although it took some time. And there was a lot of drama, wasn't there? There was the no confidence vote for May in December. That was just a month ago. It seems already way longer. But ultimately, she survived that. Then there was the vote on the deal was postponed, as you know. That's, of course, what triggered the no confidence. So there was a lot of drama, I guess, in the last few months, certainly over the last years as well. And now we're finally getting to the spot where we have a vote. And if the things are looking like they will be a no, then there is no deal as yet between the EU and the UK. There could be perhaps a new round of negotiations, but time is really running out. We have to keep in mind there's only 2 months and a week left. So that is not much time really remaining. And there are a lot of people on the UK side that say we have to vote no so that we have more leverage to negotiate with the EU again, because they don't like the fact that there is a backstop, which means that the backstop, let me explain, is basically saying that the EU and UK will continue to negotiate basically under the same terms for 1-2 years, but the UK cannot leave on its own without the permission of the EU, and there will be no hard border in the meantime as well. The problem with that for a lot of UK Parliament members is that the UK loses the ability to leave on its own. And that is problematic from their point of view because they don't determine the end process. They're dependent on the EU, giving them more negotiation power in a way from their perspective. And well, realistically, that there is some merit to that argument. So basically, if there is a end date to this special agreement of, let's say, 1-2 years, extra negotiation time, then of course there is more pressure on the EU to make an agreement with the UK. Otherwise, what the EU, of course, is saying that they will not misuse that, but there are certainly concerns on the UK side that an open-ended, let's say, extension of this negotiation period is not good. They want to limit that maybe to 2021, an extra 2 years or 3 years, but not have it without any date. This is the main criteria. This is the main, hurdle in a way between the EU and the UK finding an agreement. That's why most expect the Parliament to say no. Be aware, though, of the voting process, by the way. That is, at this moment, there are going to be 3 or 4, I think 4 amendments prior to the main vote. These amendments are small little changes to the amendment proposed by different leaders and different Parliament members, one by the opposition leader, Corbyn. And these amendments will be voted on first. If there's an amendment that wins, the other amendments will not be voted on. And then you get the vote on the main proposal at around, I think, 8 p.m. This is the process that's going to take place in the next hours, so that you know. All right, so if there's no deal, well, in any case, May is probably expected to have a speech after that or some kind of announcement. And if it is a no, then it's most likely that she's going to talk to Juncker from the EU within the next days. There is not much time left, as I already mentioned. All right, let me see if there's any chats. In the meantime, any questions? Yes, we're going to cover a lot of things, actually, Ali, including educational webinars like this, or what is not educational. This is more like a current events webinar, fundamentals as well. But we'll have educational topics. We're going to have some live trading webinars as well. So it's going to be a mix of things, and we have 2 different registration processes, one for let's say educational and one for trading webinars. So yeah, looking forward to that. Yeah, this is going to be more educational, fundamentals, and the other one is going to be technical and wave focused. So yeah, that's exciting. We're looking forward to hosting a lot of webinars and having you join us. So definitely, they're for free. They're accessible for everyone. So if you have anyone in mind that you would like to share with, feel free to do so. Absolutely. All right, so let me take a look what's going on the pound in the meantime on my other screen, because I'm looking at what I'm presenting to you here, but I just want to quickly take a look what's going on with regard to the pound dollar. As we take a look live, it is sinking. Strong candle just closed 10 minutes ago as I started the webinar. 4-hour candle closed, and it is certainly a very bearish strong candle of about 130 pips. I was bearish earlier. If you looked at my analysis on the pound dollar, perhaps yesterday or today, you saw that I was expecting downside for wave B. That is indeed occurring, but there's no way I was going to trade that. too much risk in this regard. But it is moving as we speak. There could be a lot of volatility in the next few hours, so I recommend to wait personally and not take any trades. My own personal advice, I think it's too risky. But of course, if you do, take small risks and make sure to use stop losses, because the market could be very volatile. So what's next? Well, we got the vote, as I already said. We got 2 months left. So what is the percentages? I've seen some different numbers float around. Maybe no deal at the moment, 50%, some kind of customs union where an extended negotiation period is taking place, perhaps 40%, and maybe a very small percent where there's no Brexit or some kind of second referendum. But that seems very unlikely. The government seems very determined to avoid not exiting or not having a second referendum. It seems really off the table at this moment. I would be really, really surprised if that happens. Maybe it's a lot lower than 5%, to be honest. It really seems to be more likely that there's either no deal and basically there's just like an exit like that could cause some, according to some experts, some problems in the UK with regard to goods and traffic jams at the borders, etc. We'll see if that happens. Of course, how that looks like. Companies are already stocking up some inventory, etc. Or is there going to be a different customs union? What do you think, actually? I'm curious what you think. There are different percentages being out there, but we can have our own poll and see what you think. All right, so fundamental analysis indeed doesn't change that quickly. So yeah, we tend to have them more at the end of the beginning of the year, but we can have the updates a little bit more frequent indeed. Maybe once a quarter. David traded the pound dollar. Great job. A brave trader indeed. Ali says no deal. All right. So far, a bit of a mix, I think. Well, let's take a look at the impact of the markets. I guess that making a forecast like that is I don't know, 50-50 in any case. So doesn't make much sense to talk about it. We'll find out about the politics soon enough, I guess, in the next couple of months. But this is a forecast that I've seen, I think was from The Economist, if I remember correctly. And basically, you can see different outcomes. No deal, custom union, no Brexit. I tweaked a little bit my opinion in some of this. I changed it. So, for instance, for the pound dollar, I think it could go down to 110 without a Brexit. If you look at it technically, you can see that price made a low around 120, of course, back in the day around with the July, just after the Brexit referendum. And I think that we could go below that low, basically. And whether that's 110 or 115 or even parity, I don't know. But it's going to break the low in that case, I think, if there's a no Brexit exit. Sorry, no deal Brexit. Getting these terms mixed up. If we have... it was flash crash, indeed. Yeah, you have different price levels, indeed. Depending on the broker you look at, it could be different. It was anywhere between 110 and 120. So that depends, indeed. All right. If actually, I think, apologies for that. I made a little bit of a mistake here. Yes, this should be the other way around. Oops, sorry for that. Let's quickly correct it, though. No Brexit, of course, it means that UK is not leaving. That should be positive for the pound, so it should go up. Whereas if we don't have a deal, then the pound should go down. So it's just the opposite. Quickly corrected, though. So yes, now it's correct. So if we have a customs union expansion period, I think we will see, technically, I think pound dollar is in a downtrend. And if we look at the charts, on the weekly chart, for instance, you can see clearly lower lows, lower highs. You see prices respecting the 21 EMA. You can put on the 21 EMA high low, for instance, what I do with 21 EMA zone, and you can see the prices right in that zone right now. And I'm expecting price to stay below, technically speaking, below 132. All right. So even if there is an extension of negotiation period, I don't think it will break above 132. And I think the downtrend will continue and test the previous bottom around 120. Now, if we get let's say an extreme outcome where we either avoid Brexit, yes, then in that case, I think there could be some upside. Or if there's a no deal exit, then the extension of the downtrend could, there could be more momentum basically as price moves lower. Of course, the euro pound would be the opposite. We would expect an uptrend if there is no deal. Euro strength, pound weakness basically. Interest rates, basically with no Brexit, lower; with Brexit, with an exit, basically we'd expect interest rates to go up because basically inflation could go up, weaker pound, higher costs for importing. Inflation goes up, interest rates go up to combat that inflation. And with regard to the stock market, we would expect the stock market to be higher if there is no Brexit and lower if there is a Brexit. All right, especially with the no deal. That's basically the logic behind these numbers. Now, looking at the FTSE, it's making a little bit of a correction back to the upside at this moment. We were supposed to have this webinar in December, but basically we see the price should be back into a resistance zone. I wouldn't be surprised if that is used for a bounce to the downside. But we have to take into account that, of course, this news event will have the biggest impact. Euro pound is looking like it's in a triangle and it is making a pullback at the moment. But if it breaks above this resistance trend line, I think we're looking at a continuation of the triangle. Of course, if it breaks below these bottoms, it could be making a bearish ABC zigzag as well. So it depends on the breakout direction. For the moment, though, favoring this triangle is upside. Prior to that, there was bullish momentum. In my heart, my analysis, if I look at this chart, I think there's going to be a bullish move. But I wouldn't ignore the downside break if we do get a push below 86.50. All right, that's everything with regard to Brexit. Let me check the chats quickly if we have any comments. Thank you so much, David. Really appreciate that. Appreciate your review on Forex Peace Army, by the way. Really appreciate that. Great stuff. And how can no deal impact pound dollar to upside? No, sorry. Yeah, that was that mistake indeed. Indeed, that was corrected. Yes, bullish pennant, definitely bullish contracting triangle in my book, A, B, C, D, E. But the breakout is important. All right, so that was just a quick look at the pound dollar and euro pound. Actually, not the pound dollar. We can do that now together with live charts. There we go. All right, so monthly chart. We got a break below the 21 EMA. It is a bit slow, but ultimately we are looking here at a wave 5. I think this was wave 4, and this was wave 1, 2, 3, 4, 5. Wave 4 did not go into wave 1 territory, as you can see. And if we put a fib from the end of wave 2 to the bottom of wave 3, wave 4 did go deeper than usual, 61.8 fib, but did turn neatly at that fib. Now I think we're in a wave 5. Then if we zoom in to lower time frames here, ultimately this is probably looking like some type of ABC zigzag. This may be wave A, wave B, down for wave C. So we could even put a fib from here to here. Like that. We had a nice hit at the minus 272 target. Minus 61.8 target is all the way at 89. That's a little bit far. I'm not sure if we'll get that deep. But the minus 272 target of this smaller swing is at 102, for instance. I know it's a lot. It might not get that deep, really, but yeah, that's something to consider if it breaks the previous bottom. Let's take a look at the weekly chart. Here we go. So big correction to the upside, break, of course, below this support trend line. And we got breakout hook back to the 21 EMA, bounce off the 21 EMA. Let's take a look at the daily. And I think we're looking at some type of pretty corrective here, but ultimately we're probably looking at some type of wave 4 at this moment. This maybe being wave 1. This piece is a little bit complicated. It could be expanded correction with ABC, ABC, and this being an ABC as well. So in that case, let's take rid of this fib. All right, and let's put a fib from here to here. All right, so we need to break below 122.50 before that bullish correction scenario is out of the window. So we might get a bigger bullish correction. What I'm saying, indicating with my wave analysis, is an ABC correction, maybe from this level, for instance, like this, get a head and shoulders, inverted one, then a move up again like that to retest the previous tops up in here. There we go. And that could be, again, a resistance zone for an end of the wave 4. This being maybe a wave 1, 2, 3, wave 4, down for wave 5. This could be a very nasty, expanded wave 4 in a way. And then down it goes with a renewed downtrend. Of course, if it breaks below this 125 area, basically, then with a daily candle closed near the low, etc., then in that case, we're probably not seeing this expanded correction and fall, but we're probably seeing an immediate downtrend continuation. So for the moment, it's going to be interesting on a lower time frame. If this is a correction within a bigger correction, this should be an ABC correction here. So if this is a wave A, we should see a wave B, maybe up to the pivot point, like this, and up to these head and shoulders level. Get a head and shoulders here, left shoulder, head, right shoulders, and move down again to complete an ABC pattern like that to the downside. A, B, C, then up again, then down again. But once again, I wouldn't ignore the downside necessarily. We will reanalyze it tomorrow, take a look at it later this week again, and see what's going on. In the meantime, if it's tomorrow and the Brexit news is digested, right, and we see prices right at the weekly pivot point, well, that could be a potential good move for a downside continuation with a target at 125, and then we'll see what happens at 125. All right, that's my 2 cents at the moment, but of course, really, it depends so much on this Brexit vote we'll have in the next hour or two. All right, so that's it regarding the pound. Let's check the chats here. So is it wise to go long near 125, targeting 130? Yeah, I don't like working with pending orders that much. If you see a bullish candlestick reaction, a 4-hour chart, maybe better daily chart, I think that could be good. But there is a certain risk here because on all time frames, it's a downtrend, right? So it is definitely a reversal trade idea to take a bounce at 125. One thing I want to emphasize maybe is the pattern that it makes to the downside. How does it move to the downside? Do we get an ABC zigzag? That would definitely help. If we see that pattern, that would definitely help the potential reversal trade at 125. All right, so let's get back to the second part. All right, now moving on away from Brexit, talking about what can we expect with regard to the economics in the U.S. I mean, U.S. Why specifically focus on the U.S.? Because in a way, it's the motor of the global economy, the world economy. If the U.S. does well, typically the world doesn't do that bad, does pretty well typically, or at least not that bad. Now, of course, there are going to be regional divergences. Some countries might do worse, even if the U.S. does well. But definitely when the U.S. starts to lose its steam, typically the world follows after that. And now we're talking about the whole world, right? Not just a few outliers. So it is, in a way, the engine of global growth. So far, we've had a lot of growth. In fact, we're looking at pretty unprecedented series of months and quarters and years of growth and growth. from the world and in the US since the Great Recession in 2008, 2009. Really, there's been pretty sturdy continuation. There was a double dip maybe, summer of 2010. EU zone had some problems, of course, in the years after that as well. But specifically, I would say probably from 2015 onwards, already before that, right, there was some good growth here. Stock market in the US, at least tripling, I guess, or maybe even more so. Good GDP numbers. So yes, looking good. Definitely 2017, 16, 2018 was not bad either. And a 3 point, I think the world growth was 3.4. We'll take a look in just a second. But how is it going to look like this year? Well, for the moment, the World Bank, I think IMF expecting a continuation of that. Decent growth here, as you can see, up in 2.5. But after that, some potential weakening. So it might be the last year of this relatively strong growth for the US, perhaps very cautiously. Don't want to be a doomsayer too soon. But it could be that at the end of this year, we might see some weakening. And there are several factors, I guess, contributing to this. We've had a run, a long series of positive numbers. So eventually, it's a cyclical kind of affair, so event. So eventually, steam is running out. Interest rates are going up, so the costs for companies are higher than they were, of course, a few years ago in the US. And depending on the trade war between the US and China, of course, that could have a negative effect as well. We shouldn't forget. So those are a couple of things that could trigger a weakening of the US economy. Maybe not this year, but maybe a slight turn or slow turn at the end of this year, running into 2020, for instance, right? So that could happen. Now, there are some other things that could trigger maybe some weakness in the US. There is deficit is growing. So will these tax cuts trickle down into the economy or not, right? Will there be a consumption boost or not? And those are still open questions. Those are still things we have to see. My view is I don't expect much of those tax cuts to trickle down myself. But this is a little bit of a political economic debate. And if you think yes, it's a fair argument to make. And we can shake hands and agree to disagree in a way. And we'll see. Time will tell, right? We'll find out soon. It's only going to be years fly by. So we'll find out at the end of this year how strong that economy is. I don't expect much personally. That's my view. But it's still an open question mark. So that's another factor that we'll find out soon enough. With the deficit growing, though, the thing is that, and the quantitative easing programs that the Fed Central Bank of the US has already done, there's a little bit of a tricky issue here. Because if there is a recession coming, the policy responses from the US are not that wide. There's not much space to respond to an economic recession. There was a lot more space, actually, 10 years ago from the Fed. Of course, they can do more. They can cut the rates down. Yes, they could. I mean, rates are up to 2.5%. They created space to go back to zero if they wanted to. So yes, there is some response or some space, but not as much as 10 years ago. 10 years ago, the Fed, the rates were higher. They were double at 5%. There was quantitative easing programs that they haven't implemented yet, that they did 3 rounds of them. And although Fed could do the 4th and 5th and 6th round, those rounds are not going to have the same impact as round number 1 and 2 had. So I think the Fed is less options. Now, the federal government has just given big tax cuts. Bush tax cuts have been continued, and you're looking at a pretty big deficit. So even in relatively good times. In good times, you should actually save a little money so you can spend it in bad times so that you kind of keep the economy afloat. But the money has been spent. The budget deficit could grow more, though. I think the U.S. is still way lower than Japan, for instance. And U.S. has kind of the luxury of being the global reserve currency. So they could push the deficit even more, I think, without being punished by the financial markets necessarily. So there is space there, but maybe not as much space as one would like to have. But it's a little bit of a luxury from the US that they can have this position because of the global reserve role of the dollar. So, yes, if there is a recession, I don't think they have as much space to respond in terms of fiscal and monetary policy, in terms of those two methods. But yes, there is still some space to respond. The question is, of course, will we get that recession or not? 2019, once again, it doesn't seem likely. But the question is, will this year translate into something like that or not? And will it run into perhaps into 2020? That's, I think, the main thing we have to look at. For the moment, 3 interest rates are expected in 2019. That means we would see interest rates go up from 2.5 to 3.25%. That should also slow down perhaps the economy a little bit. And this is the Fed dots here for 2019, 2020, 2021, long term. So you can see a little bit of a turn eventually in the long term. Some are positive that it will go up to 4. Others think that it goes actually back down to 3, already a decrease of interest rate, as you can see in 2021. Some of them putting it lower, actually. So a little bit of a mixed bag in 2021. But 2019, ultimately, most Fed members think it's going to go up. There are some who already disagree, though, with that, as you can see. So with regard to this recession signal, there is a recession risk this year only of 15%, so that's quite low. In the next 2 years, it's back to the average, which is 35%. So in 2020, you can see that the risk has more than doubled in a way. So, all right. One more recession signal, by the way, I want to mention is, perhaps you saw it in the news, the shorts of the yields of the short-term bonds, above the longer bonds in 2019. That typically, that inversion has led to the U.S. recession in the last 60 years. That's one of the data points that has led to some analysts thinking that the recession is, could happen at the end of 2019. All right. Here you can see, by the way, on the right, the impact of the trade war if it continues like this. And it is expected to have a bigger impact on China than the US, specifically 2019, 2020, and 2021, by the way. Then it kind of evens out. So that could have a negative impact, as you can see, pretty big this year and next year. So yes, a trade war could lead to a potential recession. All right, that's a pretty significant numbers here for both countries. That could be a substantial impact. All right. So that was basically, I think I had the global number expected, the global growth number. I don't seem to have added it here somehow. Maybe it's in the next presentation. It's possible. I think it's around 3%, 3.5% for this year, basically, GDP growth. So ultimately, I think that dollar could strengthen a little bit this year still. We're going to dive into the chart analysis, though, to be specific, next week, Thursday, same time, 22 January, same day on a Tuesday, and we're going to dive into all kind of chart analysis, some global economics, but more charts actually than fundamentals. This was just to give you a backdrop, a bit of an idea as the first part. We'll dive into the technicals of the euro dollar next week. I think that, though, looking at this year, we might see the US dollar still strengthen, but eventually I think the euro will strengthen in 2020. All right, we'll dive into that soon. Recessions have happened more often, actually. Recessions happen regularly. There were recessions in 2001, a recession at the beginning of the 90s and 80s. So they do happen more regularly. We've had now one of the longest stretches of non-recessions in a way since the Second World War, probably. But big recessions really major turns and pullbacks indeed are not that common, right? 1929 indeed, 2008, 1945, but yeah, or 1940s, beginning of the 1940s because of the Second World War, but they are less frequent indeed. True. So maybe yes, maybe a little bit too sensitive for that, but it's of course something that everyone is kind of analyzing all these data points and trying to estimate what is the next kind of turn, if there's a turn coming. So yeah, sometimes overemphasizing upcoming data is something that happens maybe too quickly indeed. Whereas because you're looking at it every day and every week, of course, and then sometimes keeping an eye on the longer picture as a fundamental analysis, I think analyst is difficult. Personally, as you know, I like to look at fundamental analysis really at most, once in a while, maybe once in a few months. Of course, I look at the bigger data events and kind of estimate whether my current thinking is still valid. But I don't think it has to be updated every week, certainly not every day. I think once a month, once a quarter is more than enough from my perspective. I know that there are fundamental analysts, of course, that probably do a lot more of that. But I like technicals. That is something that provides me with the most feedback. The trades, of course, I get from that logically. But also most of my information, all that information is incorporated into price. So I think best to analyze fundamentals once a quarter with a big update once a year. Then in that regard, we are not, over attaching or not attaching too much importance to certain events, so that we're not like overreacting maybe to the long-term picture. Because if you analyze the fundamentals very frequently, of course, you're trying to search for things and search what changes, and I think you might be then overreacting in some cases. So Ali, I think in a certain way you have a point, but do keep in mind that smaller recessions do, from a historical point of view, last 70, 80 years, do tend to occur at every couple of years. 5 to 10 years is not strange. All right. So, well, I hope you enjoyed this first webinar with FXDD. Nennet had his webinar earlier today, so hope you enjoyed both of these. And we're looking forward to see you soon. More webinars here or videos in general on the FXDD YouTube channel. And of course, next week, once again, global economics and chart analysis. Wish you all great trading and talk to you soon. Cheers.